Hello, guys. I hope you're doing well. I'm sure you're fully immersed in your preparation for May 2023 exams. Just keep doing the best that you can every day, knowing and fully believing that May 2023 will be all ours. All right. So, on that note, let's begin. Across these videos, I will be discussing with you all the amendments relating to CA Inter Income Tax. All right. In this video, I will be discussing on the amendments relating to the basic concepts chapter. Okay, we have some 4 amendments in the basic concepts chapter. That's going to be our focus in this video. So listen, the very first amendment is relating to surcharge. Now under surcharge, there are totally 3 amendments. Okay, first amendment is relating to individual HUF, AOP, BOY, AJP. The second amendment is a small amendment applicable to just AOPs, and the third amendment is relating to cooperative societies. Okay, let us discuss them one by one. First of all, talking about the surcharge rate applicable to individual HUF, AOP, BOY, AJP. Now here, if you remember, if you recall, surcharge starts when the total income exceeds 50 lakhs, right? And the surcharge rate goes up to 37%. But in the existing provision, the surcharge rate was restricted to 15% for 3 incomes: dividend income, section 111A FTCG, and section 112A LTCG. Now, the amendment is that this restriction of 15% is also extended to 112 LTCG, section 112 LTCG. Alright, I'll repeat again. According to the existing provision, the restriction of maximum surcharge rate of 15% was only for 3 incomes: dividend income, section 111A STCG, and section 112A LTCG. Now, with the amendment, the restriction of maximum surcharge rate 15% is also extended to 112 LTCG. See, let me explain it to you. See, when I talk about STCG may be of 2 categories. It may be section 111A STCG, or it may be normal rate STCG. When I say section 111A STCG, this is a special rate STCG which is taxed at 15%. Listed equity shares, listed units of equity oriented mutual fund, listed units of a business trust, right? STT paid at the time of transfer. Short-term capital gains taxed at 15% under section 111A. If you recall, no chapter 6A, but you can utilize the unutilized basic exemption limit if the assessee is a resident, right? So all those provisions we are already aware of. So either your STCG will be section 111A STCG, that is special rate STCG. If it doesn't fit under section 111A, all your other STCG is normal rate STCG. Okay. Similarly, LTCG also is split into 2 categories. In the first category, section 112A is applicable. Second category, section 112 is applicable. The same 3 assets which we talk about under section 111A, same 3 assets are covered under 112A also. What are the 3 assets? Listed equity shares, listed units of equity oriented mutual funds, and listed units of business trust, right? Even over here, I must pay STT at the time of transfer. But if they are listed equity shares, I should have also paid STT at the time of purchase. Right here, if you remember, if it's up to 1 lakh, if your LTCG is up to 1 lakh, no tax. If it exceeds 1 lakh, then on the excess you have to calculate at 10%. So even this is a special rate income. Here the applicable rate is 10%. Even over here, you do not get chapter 6A deductions, but an extra point, a special point, here you cannot enjoy 87A rebate also. Right? And I hope you are also able to remember that in section 112A you have this special provision relating to computation of cost of acquisition also, right? So that was about section 112A. If section 112A is not applicable, then section 112 is applicable. Even section 112 is a special rate taxation section. Over here we tax the capital gains at the rate of 20%. But if they are listed equity shares and 0 coupon bonds, then we have an option, okay? We have an option that if we want, we can tax them at 10% without indexation. For which assets? Listed equity shares, and for 0 coupon bonds, we have this option. In fact, the option is not only for listed shares, it's for listed securities. So in case the asset happens to be listed securities or 0 coupon bonds, and if you're fitting them under section 112, then you have an option 20% with indexation, 10% without indexation. Otherwise, generally, section 112 comes under 20% taxation. Okay, so this is how your capital gains are. So, which means I hope you're noticing that STCG may be normal rate sometimes, but LTCG will never be normal rate income. It will either be 112V LTCG or it will be section 112 LTCG. STCG, you first see if it fits under section 111A. If it doesn't fit under section 111A, you put under normal rate STCG. Similarly, LTCG, you first check whether 112A conditions are fulfilled. If not, you put it under section 112. Right, guys? I'm just giving you a small summary. Now, the amendment is that even for section 112 LTCG, the maximum surcharge rate will be 15%. Earlier, this maximum surcharge rate 15% was applicable, number one, to dividend income. Number two, it was applicable to section 112, 111A, 111A STCG. And number three, it was applicable to 112A LTCG. So, as per the existing provision, for dividend, the maximum surcharge rate is 15%. Even for section 111A, the maximum surcharge rate is 15%. Even for section 112A, the maximum surcharge rate is 15%. This is as per the existing provision. But the amendment is that this maximum surcharge rate of 15% will apply to section 112 LTCG also. So, do you agree if I conclude by saying that now LTCG will always be subject to a maximum surcharge of 15%? Isn't it, guys? Because the LTCG will either be 112 or 112. It cannot be normal rate. It cannot go anywhere else. So either it's going to get covered over here or here. Now both the places I'm saying maximum surcharge rate 15%. So I can say that LTCG will always be subject to a maximum surcharge rate of 15% only, irrespective of which section it falls under. Right? Now listen, so this is about the amendment, but I don't want to close the session with just the amendment discussion alone. I thought let me give you a small revision of surcharge as well. See, I am talking about surcharge applicable to individual HUF, AOP, BOY, AGP. Okay, listen to my quick revision and then I'll show you one example. Now, when your assessee happens to be any of these, how do you calculate surcharge? What you should ideally do is, I'll give you a set of sequences. Think in the same situation. Think in the same sequence. Alright. Now, what are the situations? What are the sequences? Listen. Your first step, you will see what's the total income of the assessee. If it happens to be within 50 lakhs, then no surcharge itself. The story ends right there. But if your total income is more than 50 lakh, then first situation is not applicable. If first situation is not applicable, you will go to the second situation. Second situation, you will see what is the total income. Is it more than 50 lakh but up to 1 crore? If it is more than 50 lakh but up to 1 crore, then the surcharge rate will be 10%. Always remember, surcharge rate is a percentage of income tax. Okay, very often students make a mistake here. They start calculating surcharge as a percentage of total income. No, it is a percentage of income tax always. Alright. In case your first situation, second situation, neither of the two is applicable, then you go to the third one. You're understanding the technique. Go step by step. If any of the steps are getting fulfilled, then the story will end right there. If situation 1, situation 2, neither is applicable to your situation, then you will go to situation 3. Under situation 3, again you will look at the total income. Is it more than 1 crore but up to 2 crores? If yes, you will ask the assessee to pay surcharge at the rate of 15% of, again, income tax. In case the third situation is also not applicable, then you come to the fourth situation. The fourth situation is slightly special. In the fourth situation, from the total income, you subtract dividend income, you subtract section 111A STCG. Earlier we used to say section 112A LTCG here, but now I will say all LTCG. Why? Because of the amendment, not only section 112A, even section 112 is now covered. So I'll say all LTCG. We will look at this balance income. Is this balance income more than 2 crore but up to 5 crore? If yes, your surcharge rate will be 25% of income tax on that balance income, but on those 3 special incomes, it will be restricted to 15% of income tax. I'll repeat again. On this balance income, your surcharge will be 25% of income tax, but on these 3 special incomes, your surcharge will be restricted to 15%. Okay. In case the fourth situation also is not applicable, then you will move to the fifth situation. Fifth situation, again from total income, you will subtract the dividend income, you will subtract section 111A STCG, and again what will you subtract? All LTCG, whether section 112, whether 112, it doesn't matter anymore, both restriction maximum 15% surcharge. You will look at the balance total income. Is the balance total income even more than 5 crores? If yes, on this balance income, whatever income tax you have, on that income tax, 37% of income tax will pay a surcharge. But on these three special incomes, your surcharge rate will be restricted to 15%. Okay, why? Because we know that dividend income, section 111A STCG, 112A LTCG, and now even section 112 LTCG, maximum surcharge 15%. Alright, then comes my last situation. If situation 1 is also not applicable, situation 2, situation 3, situation 4, situation 5, if none of these situations are applicable, then you enter situation 6. And here you straight away ask the assessee to pay 15% of income tax as surcharge. This is the most accurate and the easiest method in which you can compute surcharge. You go step by step. If any of the step gets fulfilled, then you stop over there. If no, you will end up in the last situation. 15% of surcharge, 15% of income tax will be your surcharge. Okay guys, are we clear with the slabs? Alright, so this is how your surcharge calculation will be for individual HUF, AOP, BOY and AJP. Now let me give you an example. Listen to my first example. Let us say the total income of our assessee was 5.5 crores. Okay, now in this 5.5 crores, let us say the breakup was something like this. Section 111A STCG was, let us say, 30 lakhs. Okay, then LTCG, I don't care anymore whether it is 112A or 112, because for both surcharge rate maximum 15%. LTCG was, let us say, 5 crores, alright, and dividend income was, let us say, 5 lakhs. Alright. So this leaves us with a balance income of 15 lakh, right? So total income is 5.5 crores. It includes 30 lakh STCG, 5 crores of LTCG and 5 lakh of dividend income. So balance income is 15 lakhs. Now how will you calculate surcharge? Assessee is an individual, let us say. You will follow the sequence. Now, is the total income within 50 lakh? No, it is 5.5 crores. Is total income more than 50 lakh up to 1 crore? No, it is 5.5 crores. Is total income more than 1 crore but within 2 crores? No, it is 5.5 crores. Then, is total income minus dividend minus 111A STCG minus all LTCG, is it more than 2 crore up to 5 crore? No. From total income, if I subtract 111A STCG, LTCG and dividend income, then my balance is only 15 lakhs. This balance is not more than 2 crore but within 5 crore. Also, this balance is not more than 5 crore. Are you noticing? None of these situations are applicable. So which means I have no choice. I have to enter the sixth situation. And under the sixth situation, what will be my surcharge rate? 15% of income tax. This will be my surcharge rate. Right guys, I went step by step. The total income 5.5 crores minus dividend income 5 lakhs minus 111A STCG 30 lakhs and minus all LTCG, which was 5 crores. The balance was only 15 lakhs. It was neither more than 2 but within 5 crores, nor was it more than 5 crores. So I was not able to fit under any of the first 5 situations. So I had to go into the sixth situation and I'll have to pay 15% of income tax as surcharge. Got it guys? This was my first example. Now listen, let me take you to the second example. This time let us say again the total income same 5.5 crores, but let us change the numbers a little bit. This time let us say the 111A STCG was 5 lakhs, okay. LTCG, whether 112, whether 112, doesn't matter anymore. Maximum surcharge rate for both restricted to 15%. This was 12 lakhs, let us say. And the dividend income was another 5 lakhs, let us say. So the total income of our assessee was 5.5 crore, including 5 lakhs of 111A STCG, 12 lakhs of LTCG, and let us say 5 lakhs of dividend income. Now, what is going to be my balance income? How much income will I be left over with? I'll be left over with 5.2.8 crores. Am I right? Is my math right? 10, 22, yeah, 5.28 crores. Now, which of the situations will apply? Is my total income up to 50 lakh? No, it is 5.5 crores. Is my total income more than 50 lakh up to 1 crore? No. Is it more than 1 crore but within 2 crore? No, it is 5.5 crores. Then total income 5.5 crores minus dividend income minus 111A STCG minus all LTCG. The balance is 5.2 crores. Is it more than 2 crore but within 5 crore? No. But is it more than 5 crore? Yes. Total income, which is 5.5 crores minus STCG 5 lakhs minus dividend income 5 lakhs minus LTCG 12 lakhs. The balance is 5.2 crore, which is more than 5 crore. Right, guys? It is more than 5 crores. So I'll fit under the fifth situation. Now, under the fifth situation, how will you pay surcharge? 37% of income tax on the balance income, and on these three incomes, 15% of income tax. So, what we will tell the assessee is, assessee, see, on this 5.28 crore, you find income tax. On this income tax, 37% you have to pay as surcharge. But on these three incomes, you find income tax. On that income tax, only 15% of that income tax you'll have to pay as surcharge. Right, are we clear with this? So on 5.28 crore, on this part of the income, on the balance income, whatever income tax you calculate, 37% of that will be the surcharge. But on these three incomes, whatever income tax you calculate, 15% of that only will be surcharge. So this was our very first amendment relating to surcharge. You will find all these amendments in this PDF, and you will find this PDF in my Telegram channel, the link to which I'll put in the description box. Alright, download the PDF and you can learn the amendments straight from there. By the way, do not treat these videos as sources through which you will just understand the amendment. No, try your best to finish off as much learning as possible through these videos. Through these videos, I'm not only talking about the amendment, I'm also giving you a small revision of the concept as such, because see, understand, if there are amendments, there's a very high possibility that your examination is going to ask you a question from them. So I'm trying my best to give you a 360-degree view of that particular amendment, not just the amendment alone, of the entire concept. So that way you are a little extra prepared to handle the question in the examination. So as much as learning is possible, do along with the videos. Do not restrict yourself to just understanding. That is not enough. Whatever learning you have to do relating to the amendments, finish that off with the videos. That is the most effective method of learning. Okay, so this was our discussion on the First Amendment relating to surcharge applicable to individual HUF, AOP, BOY, AJP. Now taking you to the next amendment, there's a small amendment relating to AOPs. See, let me explain it to you over here. It goes something like this. See, association of persons. First of all, what is an association of persons? Here, a group of people would have come together to voluntarily do business together. Basically, voluntarily they're coming together. They're not forced to do business together. Voluntarily, on their own, they're coming together and they're deciding to do business with each other. Okay, now in an association of persons, anybody can be a member, not necessarily an individual. See, if you look at body of individuals, only individuals can be members. But in an association of persons, anybody, individual, HUF, AOP, BOI, firms, companies, LLPs, anybody can be a member of an AOP. Okay, so let us say I have an association of persons. Now there is a possibility that all the members of this AOP, every single member is a company. It is possible. Yes, it is possible, because association of persons, anybody can be a member, even a company can be a member. So it is possible that all the members are companies. If all the members are companies, here we have an amendment. In such case, I will restrict the surcharge rate to 15%. Okay. If my AOP is any other AOP, then the usual provisions will apply. What is the usual provision? This table which we discussed is a usual provision applicable to individual HUF, AOP, BOY, AJP, includes AOP also. This is a usual provision. But if my AOP is an AOP where all the members are companies, then here the surcharge rate will be restricted to 15%. Alright, so this is about our second amendment. Now taking you to the third amendment. Our third amendment is relating to the surcharge rate applicable to cooperative societies. See, let me tell you the existing provision first. According to the existing provision, firms, partnership firms, LLPs and cooperative societies, for all the three, we have a common provision of surcharge. And that common provision is if the total income is up to 1 crore, then there is no surcharge. But if the total income is more than 1 crore, then 12% of income tax will be the surcharge. This is the existing provision. Now, this provision will continue to apply for firms and LLPs. We're removing cooperative societies from this table, and for cooperative societies, we are giving a special provision altogether. What is the special provision? Listen to me. It goes like this. If the total income is up to 1 crore, again, no surcharge. If the total income is more than 1 crore but up to 10 crores, then 7% of income tax they have to pay as surcharge. If the total income is more than 10 crore, then 12% of income tax they have to pay as surcharge. Looking at this, does it ring a bell? Is this similar to something else that you have studied? Don't you think these rates are same as applicable to domestic companies also? Even for domestic companies, up to 1 crore, you don't ask the company to pay any surcharge. More than 1 crore, up to 10 crore, you ask the company to pay 7% of income tax as surcharge. More than 10 crore, you ask them to pay 12% of income tax as surcharge. See, for foreign companies, we have different rates. Here, 2% we have, here, 5% we have. But for domestic companies, it's the same thing. So they have removed cooperative societies from the firms and LLP bucket, and they've given a separate provision which happens to be the same as the provision applicable to domestic companies. Alright, so this was our third amendment relating to the basic concepts chapter, surcharge applicable to cooperative societies. Okay, now coming to the next amendment, the tax rate applicable to companies. Let me explain this as well over here. The tax rates which are applicable to companies. See, company will either first of all be a domestic company or it will be a foreign company, right? Now, if it is a foreign company, it will be taxed at 40%, story over. If it is a domestic company, you will first of all check, does it fall under section 115 BAB? See, 115 BAB and 115 BAA. These two sections in full detail you will be learning only in your CA final. At your CA inter level, you just need to know that these two sections exist and what is the tax rate under these two sections. 115 BAB generally applies when your company is a new company which is going to be involved into manufacturing activities. It has to give up some benefits. If it's willing to give up those benefits, then these companies, I will tax them only at 15%. A very small rate. I will ask them to pay tax only at 15%, but they have to mandatorily pay 10% surcharge and 4% cess will anyways apply. Okay, in case 115 BAB is not applicable, then you will check whether 115 BAA is applicable. Even under 115 BAA, I will ask the company to give up some benefits and in return, I'll give the company a lesser tax rate. Here, the tax rate will be 22%. Even over here, it is mandatory that they have to pay 10% of surcharge. See, this 10% of surcharge over here in these two sections, I say that they are mandatory. Mandatory means what? Irrespective of the total income, they have to pay the surcharge. Generally, when do we pay surcharge? Like for companies, when do we pay? Only total income is more than 1 crore, right? But irrespective of total income, even if it is less than 1 crore, in these two sections, surcharge is mandatory. They have to pay 10% surcharge and obviously 4% cess. Okay, if 115 BAA conditions also are not getting fulfilled, then what do you do? Like for example, for our May 2023 examination, our applicable Finance Act is 2022, which is applicable to previous year 22-23, applicable to assessment year 23-24. Now what you will do is, you're trying to understand, you're trying to identify what tax rate will apply for the company in previous year 22-23. In the third scenario here, go 2 years back, that is go to previous year 2021. Look at the turnover of previous year 2021. What is the turnover? Is the turnover up to 400 crores? If yes, you ask the company to pay tax at only 25%. Otherwise, in all other cases, you will ask the company to pay tax at the rate of 30%. Okay, so this is the provision about the tax rate of companies. If section 115BAB is applicable, then a very small tax rate of 15%, but you have to pay mandatorily 10% surcharge and 4% cess. This cess is something which I don't have to tell you. Even if I don't tell you, 4% cess is obvious, right? So, but then 10% surcharge is special over here. Irrespective of income, you'll have to pay this much. Okay, 115 BA, if this is applicable to you, then 22% of income tax plus 10% surcharge plus 4% cess. If none of these two sections are applicable, then we come to the third bucket. In the third bucket, you will look at 2 years, you look at the turnover 2 years ago. Now, what is the amendment, you might be wondering? Before May 2023, the earlier attempts, May 2022 and November 2022, came under Finance Act 2021. So at that time, we used to talk about the turnover of 1920. So now, because 22-23 is going to be your year, because 2022 Finance Act is going to apply to you, you will look at 2021's turnover. Okay, so for previous year 22-23, you will look at previous year 2021's turnover. If that turnover does not exceed 400 crore, then 25% will be your tax rate. In all other cases, the tax rate will be 30%. Okay, so this is generally how you identify the tax rates applicable for companies. So the amendment is that for your current examination, for May 2023 examination, you will look at previous year 2021's turnover, because for May 2023, Finance Act 2022, previous year 22-23. So you will see 2 years back. 2 years back will be 2021. So if 2021's turnover does not exceed 400 crores, then your surcharge rate, then your tax rate will be 25%. All other cases, it is 30%. In addition to this, you also know that there are two more sections now, 115 BAA 25% and 115 BAB, which is 15%. Sorry, 115 BAA 22% and 115 BAB 15%. Right, 115 BAA 22%, 115 BAB 15%. Alright, now taking you to the next amendment, the last amendment in the basic concepts discussion, cash credits. Let me tell you what this is and how does it work. Understand the concept first and then I'll explain the amendment to you. The cash credits are those transactions for which I am not able to give a satisfactory explanation to the income tax department. Let us say in my books of accounts, I've passed an entry saying I've received so much cash. Now the income tax department is asking me, from where did you get so much money, Anushree? I am saying I don't know. Now I can't tell the income tax department this is black money. You are understanding. So basically, the income tax department is asking me a question and I'm unable to give a satisfactory explanation. That is a cash credit. Or let us say I have some income and the income tax department is asking me, Anushree, from where did you earn so much income? What are you doing? I am saying I don't know. Now I can't say I smuggled gold and that's how I got this income. Examples, okay? So all of these are, cases where I am unable to give satisfactory explanation to the income tax department. Let us say I have an unexplained investment. I bought shares of Reliance Industries Limited. Let us say I spent 5 lakhs and I purchased shares of Reliance Industries Limited. Now again, income tax department is asking me, Anushree, where did you get so much money? How did you get so much money? Where did you get it from? You've put 5 lakhs into Reliance Industries shares. Income tax return, you are saying no income. Then how did you get 5 lakh rupees from? Where did you get this money? I'm saying I don't know. So I'm not able to explain the source of the investment. In such cases, the income tax department will ask me to pay 60% tax plus 25% surcharge, mandatory surcharge irrespective of the income, and 4% cess. Even if it is within basic exemption limit, I still have to pay this tax. Against this income, no deduction, no subtraction, no allowance, nothing. The entire income will be taxed on a gross basis at 60% tax plus 25% surcharge plus 4% cess. And generally, I earn income in the previous year. You ask me to pay tax only in the assessment year. But here, you will ask me to pay tax in the previous year itself. The department will not wait till the assessment year. This is the existing concept, right? 60% tax plus 25% surcharge plus 4% cess. Effectively, you will end up paying 78% tax, right? How 78%? 60% is a tax. Now 60 into 25% if you do, how much will that be? That's going to be 15 rupees, okay? So 60 rupees tax plus 15 rupees surcharge. plus, so 75 rupees. On 75 rupees, 4% cess will be 3. So totally 78 rupees tax you will have to pay if your income is 100 rupees. So effective tax rate will be 78%, 60% of 100. I assumed my cash credit was 100. If cash credit was 100, then 60% of 100 you will have to pay as tax. That's going to be 60 rupees. Then 25% of 60 rupees you will have to pay as surcharge, which will be 15 rupees. So your total tax will now be 75 rupees, and 75 into 4%, 3 rupees will be the cess. So total 78 rupees tax you will end up paying if you have a cash credit of 100 rupees. So effective tax rate 78%. Alright, so this is a general existing rule about cash credits, that if you have cash credits, that is, you're unable to explain where you got that cash from, or if you have any unexplained income, unexplained investments and all, then in the same previous year, at that time itself, we will not wait till the assessment year. In the previous year itself, the department will ask you to pay 60% of that cash credit as tax, plus 25% surcharge, plus 4% cess. That is effectively 78% of those cash credits you will have to pay as tax without enjoying any basic exemption limit. Now, to these cash credits, to this concept, a new explanation has been inserted, according to which the law says that in case I have received a loan from someone, okay, then that person who is giving the loan to me, the lender, even the lender should be able to explain to the department that where he got the money from to give me the loan. Are you understanding? We are expanding the scope of cash credit. See, let me explain the concept to you over here. I'll explain it to you with the help of an example. I'm talking about the last amendment in the basic concepts chapter relating to cash credit. Let us say I received a loan from this person, Mr. Blue. Okay, income tax department is asking me, Anushree, where did you get this money from? I am saying with full swag, I got this money as a loan from Mr. Blue. I gave explanation to the assessing officer. But this explanation will be considered satisfactory only if even the lender is able to explain to the AO that from where did he get the money. To give the loan to me, first of all, he needs money. So even he will have to give explanation to the AO that from where did he give this money. Only if this explanation is satisfactory, only then the explanation which I gave will be considered as satisfactory. If this explanation that the lender is giving is not satisfactory, then even my explanation will be considered to be non-satisfactory, and this loan will be considered as cash credit, unexplained income and all for me, and it will be taxed at an effective rate of 78% in the previous year itself. Perfectly understood, guys? Now, yes, so in case I'm receiving a loan and if the AO has doubts about this, if the AO is asking me from where I got the money, I am able to give an explanation to the department. I'm able to say I got this money as a loan from Mr. Blue. Now Mr. Blue also will have to give explanation to AO saying from where did he get the money to give me the loan. Only if he is able to give a satisfactory explanation, only then my explanation to the AO will be considered as satisfactory. If his explanation is not satisfactory, even my explanation will not be satisfactory, and now this loan will be treated as cash credit, unexplained income, unexplained investments and all, and it will be taxed at the rate of 78% effectively. Alright guys, so these are our 5 amendments relating to the basic concepts chapter. Our first amendment was about the surcharge rate. Then the amendment is that maximum 15% surcharge now applicable to section 112 LTCG also. Our second amendment was in case my AOP consists of only companies, then the maximum surcharge rate will be 15%. Third amendment is cooperative society surcharge rate applicable will be same as applicable to domestic companies. The fourth amendment, for previous year 22-23 in companies, you will look at previous year 2021's turnover. If that doesn't exceed 400 crores, then the maximum tax rate in 22-23 will be 25%. And lastly, cash credit. In case I'm getting a loan, then the lender also has to give explanation to the AO that from where he got the money, what is the source of the loan. Explanation offered by the assessee shall be considered to be satisfactory only if the person in whose name the credit is recorded in the assessee's book. This is none other than the creditor, the lender. So he should also offer an explanation about the nature and the source of the sum so credited, and such explanation in the opinion of the AO should be satisfactory. Only then this amount will be not considered as cash credit for the assessee. Crystal clear? Alright, so that is it guys for this video. I'm going to be recording small videos for the amendment so that you can watch them on the go whenever you have the time. Alright, so in this video we've just covered the amendments relating to the basic concepts. In the next video we will be seeing all the 5 heads of income together in one single video, because there aren't too many amendments relating to the 5 heads. Alright, so that's it with this video. Thank you guys.